I still have the report. I filed it on April 16, 2020. It was acknowledged the same day. I have heard nothing since. That is not unusual. I work in compliance at a pension fund. We manage 14 billion. My job is to notice things and file reports about them. Most of those reports result in no action. That is also not unusual. The reports go into a system. The system acknowledges them. Sometimes someone calls. Usually no one calls. I have been doing this for 11 years. The thing I noticed in April 2020 was a timeline. A very clean timeline. The kind you only see when someone has been careful about everything except the dates. Between January 14th and February 28th, 2020, a London-based hedge fund called Greystone Capital built a short position of 580 million in Brazilian sovereign bonds denominated in sterling. The position was constructed through 7 prime brokers over 34 trading days. The trades were small, none large enough to trigger reporting thresholds individually. Cumulatively, they were enormous. On March 1st, 2020, Meridian Credit Ratings issued a sovereign downgrade of Brazil from BBB to BB+. That is the line. BBB is the bottom rung of investment grade. BB+ is the top rung of junk. Crossing that line means something very specific. It means that any institution with an investment grade only mandate must sell, not may sell, must sell. It is written into the mandate. The computers do it automatically. 41 institutional investors operating under investment grade only mandates were forced to sell Brazilian sovereign bonds on March the 2nd and 3rd. The bonds fell 24% in 3 trading sessions. Greystone Capital closed its short position on March 4th. Profit, 291 million. The lead analyst on the Meridian downgrade was named Catherine Walsh. Her biography on the Meridian website listed her previous experience. She had worked at Greystone Capital. She had resigned on June 30th, 2019, 8 months before the downgrade. I noticed this because my fund was one of the 41. We sold 340 million of Brazilian sovereign bonds over 2 days. We had no choice. The mandate is the mandate. I was reviewing the trading activity and I saw the price movement and I thought, someone made a great deal of money on this. So I looked to see who. That is not difficult. Prime broker disclosures are delayed, but they are public. It took me 2 hours. Greystone Capital had built the position over 6 weeks through 7 brokers. The position was closed the day after the forced selling ended. Then I looked at the analyst who issued the downgrade. That took 4 minutes. I wrote the report because it was my job. I listed the dates. I listed the amount. I listed the prior employment relationship. I noted that the relationship had been disclosed in the analyst's biography, that it was not concealed, that it was simply there in plain sight for anyone who wanted to look. I submitted the report at 4:47 p.m. on April 16, 2020. It was acknowledged at 4:51 p.m. 4 minutes. I have checked periodically since then. The report sits in the system. It has a reference number. It has a status. Reviewed. No further action required. That status was assigned on April 17, 2020, 1 day after I filed it. No regulator opened an investigation. Meridian Credit Ratings issued a statement in June 2020 saying that all downgrades are based on rigorous analysis and that the professional background of their analysts is a matter of public record. Greystone Capital declined to comment. The Brazilian government filed a formal complaint with the FSA. The complaint was reviewed, No action was recommended. I stopped expecting anything to happen. I do not mean this as criticism. I mean it as description. I file reports because it is my job to file reports. The system acknowledges them because it is built to acknowledge them. What happens after that is not my area. I understand this. But I do still think about the timeline because it was so clean. January 14th, first short trade. February 28th, position fully built. March 1st, downgrade issued. March 4th, position closed. And June 30th, 2019, the resignation date, 8 months earlier. 8 months is a long time. Long enough that you cannot say there is a direct connection. Not legally, not in a way that would survive scrutiny. But 8 months is also not very long. Not long enough to say the person who made the decision forgot who she used to work with. Not long enough to say the relationships dissolved. Not long enough to say the knowledge disappeared. What I think about is this. The position was not hidden. The prior employment was not hidden. The timeline was not hidden. Everything was disclosed. Everything was public. And that is what made it work. Because if you hide something, someone might look for it. But if you simply state it, if you put it in a biography, if you file it with the appropriate authorities, if you make it part of the public record, then it becomes a fact. And facts do not require investigation. Facts are simply there. I have thought about publishing the report myself. I have a copy. I have all the source documents. I have the trade confirmations, the downgrade announcement, the analyst biography, the timeline. I could put it on a website. I could send it to a journalist. I could make it impossible to ignore. But it is not ignored now. It is reviewed. That is what the status says. Reviewed. No further action required. Someone reviewed it. Someone read it in less than 24 hours and decided that no further action was required. Someone made that decision. I know who. I have known since April 17th, 2020. The system shows me who updates the status. It is automatic. I can see the user ID. I can see the timestamp. The person who reviewed my report and marked it "No further action required" was the head of compliance at Salter & Rowe. Salter & Rowe was one of the 7 prime brokers. Salter & Rowe routed $180 million of Greystone Capital's short position. The person who closed my report had processed the trades. She had signed off on them. She had filed the delayed disclosures. And then, 1 month later, she read my report in less than 24 hours and decided that no further action was required. Her name is in the system. I have the trade confirmations. I have the acknowledgement timestamp. I have the status update. I have had all of it for 3 years. I have not published any of it. People have asked me why. Not many people. This is not something I talk about often. But the few who know have asked, why not send it to someone? Why not make it public? I tell them I am still deciding. That is not true. I decided a long time ago. I decided the day I saw her name. I decided that if the person reviewing my report was the person who processed the trades, then the system was not broken. It was working. It was working exactly as it was designed to work. And publishing the report would not change that. It would just make it public. What I am still deciding is whether that distinction matters. Whether making something public changes it, or whether it just means more people know that nothing will change. I filed the report on April 16, 2020. It was acknowledged on April 17, 2020. The status has not changed since then. The timeline is still there. Anyone can see it. The trade confirmations are public record, delayed by 90 days but public. The analyst biography is still on the Meridian website. The downgrade announcement is still in the archives. All of it is there. Anyone can see it. I check the report sometimes. Not often. Maybe once every few months. I do not know what I am checking for. The status will not change. I know that. But I check anyway. Because I think maybe one day I will open it and I will feel different about what I am looking at. I have not felt different yet. What I feel is this. The amount was 291 million. The timeline was 6 weeks. The connection was 8 months old and publicly disclosed. The report was reviewed in 24 hours by someone who had processed the trades. And none of that was hidden. None of it needed to be. I still have the report. I am still deciding. No. I decided. I had decided before I wrote it. The analyst name was Christopher Venables. The fund manager was Sarah Chen. They had worked together at Deutsche Bank from 2011 to 2012. This was disclosed in his biography. It was disclosed in the trade notification. It was disclosed in the conflict register. Everything was disclosed. On February 28, 2020, Christopher Venables downgraded Heathcote Medical Group from buy to hold. The report was published at 7:02 a.m. The stock price fell 18% by market close. Between January 10th and February 27th, Sarah Chen's fund sold its entire position in Heathcote Medical. 4.2 million shares. The sales were executed in tranches, reported 90 days later as required. The average exit price was 69.40. On February 28th, after the downgrade, the shares closed at 56.80. The fund avoided losses of approximately 53 million. The phone call happened on January 9th. I know this because Christopher Venables logged it. He was required to log external communications with fund managers. He did log it. Time, 14:47. Duration, 23 minutes. Subject, sector outlook discussion. He logged it correctly. I do not know what was said on that call. The call was not recorded. It did not need to be. It was a routine communication between an analyst and a client. It happened every day. It still happens every day. What I know is that the selling began the next morning. January 10th, first tranche, 340,000 shares. I pulled the communication logs on April 14th. I had been monitoring the trade data for something else. A routine surveillance pattern. Unusual concentration of exits before a rating change. Heathcote Medical was flagged by the algorithm. It flags approximately 200 names per quarter. Most are coincidence, statistical noise. Someone always sells before bad news. It does not mean they knew. But I looked anyway. Because it is my job to look. The pattern was clean. Too clean. The final sale executed on February 27th. The downgrade published on February 28th. Not a single share sold after the information became public. Perfect timing is usually imperfect. People get nervous. They sell too early or hold too long. They second guess. They stagger. This was perfect. I reviewed Christopher Venables' research notes. They were comprehensive. He had been tracking Heathcote Medical for 9 months. His notes showed increasing concern about their supply chain exposure, their contract renewals, their margin compression. His notes were dated October 2019, cautious, November 2019, monitoring, December 2019, concerns escalating, January 7th, 2020, recommendation change under consideration. 2 days before the phone call. I pulled the call with my supervisor on April 15th. Her name was Rachel Harding. She had been in compliance for 14 years. She reviewed my findings in silence. Then she said, the relationship was disclosed. I said, yes. She said, the call was logged. I said, yes. She said, do you have the content of the call? I said, no. She looked at the timeline for 90 seconds. I counted. Then she said, what do you think happened? I said, I think he told her he was planning to downgrade. I think he told her before he finalized the research. I think she used that information to liquidate the position. She said, do you have evidence of that? I said, the timeline. She said, the timeline shows a call and subsequent trades. It does not show the content of the call. I said, the timing. She said, could be coincidence. Could be that she reached the same conclusion independently. They work together. They think similarly. She might have been reviewing the same data. I said, she sold everything, 6 weeks before the downgrade, not a single share after. She said, that suggests good analysis. I said nothing. She said, Jessica. That is my name. She does not use it often. She said, I know what you're thinking. I am thinking it too. But what we think is not evidence. The relationship was disclosed. The call was logged. Their prior working relationship is exactly why these disclosures exist. To make it transparent, to put it on record, so everyone knows there is a connection and can evaluate the trading in that context. I said, and? She said, and the disclosure did its job. The connection is visible. If someone wants to investigate, they have everything they need. I said, will someone investigate? She said, that's not our decision. I said, then whose decision is it? She said, you can file a suspicious activity report. You know that. If you believe there is potential material non-public information sharing, you can document your analysis and submit it. I said, will anything happen? She said, I don't know. She said, probably not. I filed the report on April 16th. It took me 4 hours to write. I included the timeline, the trade data, the communication log, the research note progression, the disclosed relationship, the statistical probability of the timing. I wrote, while no direct evidence of MNPI sharing exists, the pattern of trading activity immediately following disclosed communication, combined with perfect exit timing prior to public downgrade, warrants further investigation to confirm no breach of insider trading regulations occurred. Warrants further investigation. That is how you write it. You do not accuse. You do not conclude. You document facts and suggest that someone else should look more closely. The report was acknowledged automatically on April 17th. Status, under review. I checked it on May 20th. Status, under review. July 8th. Status, under review. October 1st. Status, under review. January 2021. Status, under review. Christopher Venables received a performance bonus in March 2021. I saw the announcement. Top-ranked analyst in healthcare services. His Heathcote medical downgrade was specifically mentioned. Timely identification of fundamental deterioration. Sarah Chen's fund reported a 34% return for 2020. Outperformance was attributed to active risk management and disciplined sell discipline. Disciplined sell discipline. I saw Christopher Venables once. This was June 2021. There was a compliance training session, mandatory. Insider trading prevention and information barriers. He sat in the third row. He took notes. When they showed the case study about improper information sharing, he nodded. He answered a question about disclosure requirements. His answer was correct. After the session, he stayed to ask a follow-up question. He wanted to know about the specific timing requirements for logging external communications. He wanted to make sure he was doing it correctly. The trainer complimented him. She said most analysts were less diligent. I have thought about that moment many times. Whether he knew I had filed the report, whether he knew I was in the room, whether the question was genuine or performance, whether it matters. Here is what I think happened. Christopher Venables told Sarah Chen he was considering a downgrade. Not that he would, not when, just that he was concerned, that the research was going in that direction, that she might want to review her position. And Sarah Chen made her own decision, based on her own analysis, based on their shared history and her knowledge of how he thought, based on her professional judgment that if Christopher Venables was concerned, she should be too. And none of that would be illegal. Or Christopher Venables told her nothing substantive. They discussed the sector, the public information, the same trends everyone was watching, and Sarah Chen drew her own conclusions, and sold, and happened to be right. And none of that would be illegal. Or Christopher Venables told her exactly what he was planning and when, and she used that information. And they both knew exactly what they were doing. And proving it would require the content of a 23-minute phone call that no one recorded, because no one was required to record it. The system worked perfectly. The disclosure was filed, the relationship was transparent, the call was logged, the report was reviewed, everything was documented. Everything was visible. And nothing happened. Because nothing could be proven. Or because no one wanted to prove it. Or because the distinction between those two things has stopped existing. I still have the report. All of this is in it. The names, the amounts, the timeline, the phone call, everything I just told you. What I am deciding is not whether to release it. I already decided that. What I am deciding is whether I believe that releasing it will mean anything at all. Whether someone will read it and investigate what should have been investigated. Or whether someone will read it and explain why the timeline is actually fine, why the trading was actually reasonable, why the disclosure system actually worked exactly as intended. Whether the problem is that something wrong happened and was not stopped, or whether the problem is that nothing wrong happened because everything that should be wrong has been made permissible. I do not know which of those is true. I think that is the only thing I am certain of anymore. The report is dated April 16, 2020. It is still under review. It will always be under review. very long silence.